Today, I wanted to talk about what is an offer in compromise and how does it work. An offer in compromise is a program set up by Congress for the IRS that allows taxpayers to settle their tax debts for less. There are a few exceptions and there's some rules that apply. Not everybody qualifies for an offer in compromise by any stretch of the imagination. The basic rule is that when you file an offer in compromise, you're submitting a story, a large packet of information that tells a story that the taxpayer will not be able to pay the liability owed to the IRS within the time left on the statute of limitations. For example, let me get into the factors that calculate the offers in compromise. An offer in compromise based on doubt as to collectability, which is by far the most common type of offer in compromise. And I'm going to talk about specifically a cash offer in this video. A cash offer is payable within 5 months of acceptance of the offer. Most offers we're seeing are running somewhere between 6 months for a simple offer to 18 months or even more for more complex offers. But the taxpayer is going to have 5 months to full pay the offer from the date of acceptance. A cash offer is calculated by taking the monthly disposable income, multiplying that by 12, adding in the value of the assets, and that's the amount of the acceptable offer. I'm going to give you an example here. If the taxpayer owed $100 or had $100 in disposable income, $100 times 12 is $1,200. Let's assume no assets for a moment. They could settle that liability for $1,200. I've done it a number of times. However, a person who owes $100,000 to the IRS and has $300,000 equity in their home is very unlikely to qualify for an offer in compromise. Why? Because that equity in the asset, that equity in their home, is considered available to full pay the IRS. They have more equity in their home than they owe the IRS, and that offer is very likely to be rejected. How much should you offer the IRS? This is a little bit controversial. I'd say as little as possible while keeping to the formula that I had just described. So I like to start out low because I can come up in the negotiation, which usually happens in my case. I will start out low, usually $500 to $1,000, again, depending on the circumstances. And quite often after the offer is investigated, they say, we can't take your $1,000 offer, but we can take 2382, just as an example. And in that case, I call the client, I get the approval for that 2382, and they've just settled their tax debt for $2,382. Real briefly, I wanted to talk to you about how a tax professional can help in making sure that your offer is accepted. These offers are not easy to prepare, specifically on a one-off basis. I see tax pros all the time that might do one offer every 5 years or two a year or something like that. And it's even difficult for them. We do several per month and have been doing that for over 25 years. I feel like personally, I've seen everything that could go wrong in an offer. And many of those offers where something went wrong were still accepted in the end. So if you have questions about this or really anything pertaining to IRS offers and compromise, I suggest that you visit our website at getirshelp.com.